Okay, now we get to the exciting part. We're going to be talking about the first strategy, which is Bill Williams' Three Wise Men strategy. Let me just give you a few references. This guy, lightforex.com, Bill Williams Trading Chaos, Three Wise Men Trading Strategy. He did a pretty good summary of the book, so you can read it here if you want the summary. If you want the book, it's available on Amazon. Trading Chaos by Bill Williams and his daughter. He uses math to give you a visual picture of what the underlying psychology of the market is. So usually you feel emotions when you're trading, like you have a gut feeling, and it's usually wrong. So Bill Williams designed an indicator that would prevent you from relying on your feelings, and instead rely on what you're seeing on your screen. Okay, so let's start. This is the alligator indicator. Okay, this is your main guide. Below the alligator means it's bearish. Above the indicator means it's bullish. Okay, the lines are spaced apart and are in order blue, red, green. Blue, red, green. They're lined up in order. That means you're in a trending market. And crisscrossing like this, it's either in reversal. It's in reversal, not like this. Then it's resting. So Bill Williams would advise against trading in this kind of environment when the alligator mouth is closed. He encourages trading when the alligator's mouth is open. Okay, so the first of his three wise men strategies is the first wise man, which is to look for a trend reversal, for a sign of a trend reversal. So how do you look for a sign of a trend reversal? First, you would want to look for this what do you call this? Let's just say here is a better example. There's an angling away of the price action from the angle of the alligator. Can you see it? This is like, it's angling like this, but then the price is angling away from the flow of the alligator's mouth. So when you see that angling away, then you better be in point because it's moving. But then here you see a candle that goes to a bottom, and then it ends way above or over 50% above the low. So for example, this is the candle, whole candle, what do you call this, height. It ends here, which is more than 50% of the total candle height. That is what we call a bullish divergent candle, which means the price is getting ready to reverse. So the important thing is you have to see an angling away to get a better chance of this being a winning trade. So what are the signs? What candles would you see that would show you that it's about to reverse? This one here is a good indicator. There's a long tail. we would call that a hammer. This is actually not a good example of a hammer. A hammer would have a small head near the top, but this one would do in a pinch. Pincers, they look like pincers, a couple of long tails, and twin towers are the opposite. This one, two solid candles of different color. So those would be signs of reversal. Also here, there is this, I don't know what you call this, but it's made up of three candles. There's the one going down, and then there's the one with a small head, and then a move up. So it's like a U shape. So these are actually just signs. The actual time that you trade is if the price action moves above those signal candles. So let's look here. This is a pincer, and then it moves below. So you would have taken that trade. The thing is, sometimes, a lot of times actually, these signals. So Bill Williams advises you just do a fifth of your normal lot size for the first wise man trade. So you're taking a chance that it is actually the start of a trend reversal, and you get to ride the whole ride down. A good sign of reversal here. If you had taken this bearish divergent candle, you would have ridden from here up to here. It's a good ride. Okay, what else? To increase chances of success, you should check your supports, resistances, and pivots. I use investing.com. Okay, so go to investing.com, currencies, GBP USD, and then the technical page. Choose daily, and you will see pivot points, resistance 1, R2, R3, support 1, support 2, support 3. Okay, so how do you apply that to the first wise man strategy? If, for example, price reaches the support, and then near that support, either above or below, because sometimes it overshoots, it forms a divergent candle, a bullish divergent candle, and then moves above the bullish divergent candle. Then you take the trade and then ride it all the way up to either the pivot or R1. So that would increase your chances. If there's a support area, that would increase your chances of it being a real trend reversal candle. And again, also, you have to look for the angulation away from the main alligator flow. Okay, I think that's it for the first wise man.